Greetings, members one and all of the Salivation Nation. Silver, $3,860 per ounce. A dramatic turn of events. Let's explore. Kudos to anyone who can name the band that has an album with that same title. For those who have followed my channel for a while, you'll know that I have covered topics related to the dollar to silver ratio for quite a while now. I have a series of videos on it called The Debt Clock in Silver, and I always need to explain in every video what this means because people misconstrue the meaning of what this is about and say clickbait this, clickbait that. But this is an important topic, maybe even more important than the price of silver. And this is why I'm doing this. So it's, before you comment about silver will never get to $3,860 an ounce, or you're doing just clickbait titles, listen very carefully to what I'm about to say. It's very important. This is a ratio. This has nothing to do with price. Nowhere on here is it saying that silver is or should be $3,860 per ounce. What this is the dollar to silver ratio right now. In other words, if you look at the definition of this, when you highlight your mouse over the price, you can see that this is the year-over-year increase in the U.S. M2 money supply divided by the yearly world production of silver in ounces. That's really the bottom line here. So in other words, one of these dollar bills that I'm holding in my hand, the physical printing of or digitization of these dollars, there are 3,860 of these in various denominations, but essentially it's notes, digitized dollars, or what have you, for every ounce of silver mined per year. And that is more important in my mind than price. Why is that? Well, because this gives you an idea of the rarity of silver compared to the monetary supply. To me, this is one of the biggest arguments to hold silver in your possession. And this is why I'm bullish on silver. By the way, there's a number as well for gold, and you can see here that the dollar to gold ratio is substantially more, $27,373 in this case. And there is also that amount that was up higher before, but this was revised downward. So let's talk a little bit about these numbers, because what happened here was, you may have seen a video that I did where it was over $5,000 per ounce, and then it reversed back some, but now it's taken a dramatic turn to the downside, and it leaves people wondering, well, how accurate is this data? How are they measuring this? Well, no one really knows. They're sourcing, they tell you their sources, but to take a deep dive into their sources is going to take a little bit of research, which I've done, and I'm going to show you a little bit what I've done, but I can really only guess. We can kind of hypothesize exactly what is going on here. But before we get into that, we know these numbers went down, and they went down dramatically. But what number is going up? Look at there. The U.S. national debt, that is continuing to climb at a dramatic rate for sure, and it will continue to do that, as we see here. The U.S. national debt is going to hit $30 trillion soon. In fact, they've already allocated a lot of this money to be spent. They can't spend it fast enough. It's really that bad. And so how severe is this? Well, you look at the U.S. federal debt to GDP ratio over snapshots in time. From 1960, it was 52.81. In 1980, when the federal debt to GDP ratio was 34.6. In 2000, it was 57.65. Look where it is now. Over double the high in 2000, 127.98. So that's the debt to GDP ratio that is certainly unsustainable. They know something is coming here, and my guess is they're probably spending all this money and doing all of this using COVID as a cover in order to do it, because they know they're going to be resetting everything. There's going to be this great reset everybody's been talking about. They're going to tie it to a whole lot of things like social justice, the woke movement, and tracking of pretty much every American or anybody that spends money in the world. And that is scary when you think about that type of thing, which is why we hold precious metals. And then we have the money creation, USM2 money supply now, and that's another thing. Now, if we zoom this out here, we can see and get an idea of that M2 money supply and what that definition is here. And this is what they're looking at here: individual accounts, an IRA, and institutions and balances and retail money market funds. And so it is various different sources of how that's played out. So it's not just currency, it's other areas as well too, denomination, time deposits, but it all derives from the currency. And that's kind of where that is done. Now, one thing in my little research here and discovery, and this is something that's been on the debt clock for quite some time, and it's worth noting. And I think that when we look back here at the dollar to silver ratio here, we can see here that again, it's a year-over-year increase in the U.S. M2 money supply divided by the yearly world production of silver. And now look at the other in red. It says real-time running total. And it also says U.S. dollar to silver ratio now. They emphasize now in red. So that means that it is a running total right now. That's what the state of it is now. Tomorrow, or when they update this again, it could change in one way or the other. So exactly how could it change, and why would it go down? Because they've only talking about tapering the quantitative easing, the M2 money supply. They're only talking about tapering. Do they destroy currency? Well, are they starting to do that? Are they doing that to maybe stave off inflation to a point? What's going on there? I don't know, because some people say that if they're trying to tighten up the money supply, maybe they're doing it on the back end where any kind of those dollars that come back through to the Federal Reserve, well, they're taking and destroying that currency. That could be one answer that maybe we're not thinking about, but that's quite a dramatic downturn. And right now they want that liquidity. They want that currency out there. So I doubt that's happening. And maybe it's the amount of silver that's mined. Maybe that's changed. Maybe there's more of it that's being created, that's being mined on an annual basis. Well, here we have monthly publications and annual publications. Well, considering that this change has happened within the year, or within this year, 2021, the only source that we can have here from the USGS, which is where I'm sourcing this from here, is from their monthly publications. And their monthly publications stop in March. And here we are in June. So April and May are not there. Now look at last year. The first one started in March. And it could be that they stagger them in a different way. March, April, May, June, those are consecutive months. And in 2021, they are January, February, March. So I'm not sure exactly how this is done. It's supposed to be monthly, but it's not happening here. And in 2020, it started in March. In 2021, it started in January. February, March, there's no April, and there's no May here. We wouldn't expect June. But if we look at March, which I don't think this is going to tell us a whole lot here, in my view, as far as where this is for the supply of silver here. But as you can see, it's increased. And for the first quarter of 2021, the average daily price will increase here. That's silver price. U.S. mines produced 88.9 kilograms of silver, or 9,000 88,900 kilograms of silver in March 21. And so quite a bit here. And they've really upped and increased their supply here from March and January of 2020. May was kind of a low there, at least in the States. And so we've also seen an increase of 3.7% in respect to the same time period in 2020 in Peru, which is a huge producer of silver. And so it could be that, considering that this is measuring it, a real-time running total means that it is from year to year. So in other words, as we go to the next month, you're chopping off the previous month and the previous year. So in this case here, some of these earlier months here in May, this goes away. In July, this will go away, and then you will see an increase. That means there's more silver per dollars printed. And that's, I think, why the numbers are going down. And I believe that's what's going on and why that's occurring. Now, the other measure here is a monetary supply. I've got up here a chart from the Federal Reserve, and this is the M2 money supply stock. And we can see here that in April, it was ramping up pretty dramatically, but then it's somewhat still increasing, but somewhat leveling off at not as much of a strong pace. So here we are in May, June. It's been pretty much going up. It is relatively the same rate, but it's kind of leveling off to a point here, and we are starting to see this climb here. So it's not really tapered a whole lot, but it has increased. So this kind of, in a sense, contradicts, because it's going up really kind of at the same rate, and there's more. If we go from May to May, let's say, there's more money here being created as an increased annual production here, or monthly production, than there was in this time period. Unless perhaps somehow it's these numbers on the debt clock here are reporting or are delayed, and they may be looking back. But nonetheless, I would still think that, given that where we are at and how this is measured, that we should see these numbers increase, unless the silver production is increased to such a level between these two time periods here that it is offsetting that increase in the monetary supply. But that is my guess, is it's somehow tapering off from previous months past that are no longer in the mix, and that's how and why this is changing to the downside. But I don't know. It's really kind of speculation at this point. But nonetheless, one thing is for sure, it's still a dramatic increase from last year. And if you look at my playlist, you will see, go back to where it first started. I think my first video on this, it was $841 dollar to silver ratio. So there you have it. So let me know what your thoughts are. It's very interesting indeed. This is something that I like to track, and I've been doing it for a while now, and will continue to do that on this channel. And so let me know your thoughts. I'd like to extend a multitude of gratitude to you all for taking the time to watch this video, and encourage you to please rate, share, comment, and subscribe.